All right, team, let's get into the news for today. Today, we announced progress toward our goal of advancing 24/7 collateral mobility. DTCC's Collateral AppChain, a shared infrastructure platform for collateral, will leverage the Chainlink Runtime environment and Chainlink data standard to enable near real-time collateral. So I think the transactions processed in 2025 by DTCC was in the quadrillions. I think it was 4.7 quadrillion. And so this is, DTCC has three main subsidiaries, and they, transact with securities, they custody, they do a lot of different things. One of the things I wanted to talk about is I just thought about showing this, and I don't know if you guys will be able to see this, but I was writing this weekend. I was trying to figure out what does the old system look like compared to the new system. So you guys can kind of see right here. I'll maybe zoom in. Bank A needs to send collateral. Custodian checks inventory, checks the risk systems. Then humans manually reconcile records. Okay, so we still have human intervention with collateral management. And then messages are moved through institutions, and then you get a full settlement that may take 1 or 2 days. Within the new system with Chainlink and what DTCC is trying to offer with Collateral AppChain, which is blockchain based and will use Chainlink runtime environment and data standard for on and off chain data feeds. You have a treasury bond exists tokenized. So the bond is already tokenized. What happens after that? The smart contracts define what the transaction will look like and will dictate the collateral rules. Chainlink feeds in the prices, the valuation data, eligibility, and then the margin requirements. And then the system is automated to check the inputs and see if it meets the criteria, and then the collateral transfer. So you have this automated system without having to have human intervention, humans manually reconciling the records. And so this is the integration we've wanted to see within blockchain. And I think it's pretty impressive from this perspective. I did want to point out this other one because within the Chainlink topic right now, what is Chainlink? Chainlink is taking up 70% of the market share of decentralized Oracle networks. Lombard is migrating $1 billion in Bitcoin-backed assets to Chainlink's CCIP. CCIP is cross-chain interoperability protocol that is by Chainlink. That is the connective tissue between blockchains and companies, or blockchains and institutions. That is the connective tissue we saw in JP Morgan Connexus, Chainlink CCIP, or Chainlink Runtime Environment, which is the generic term for all the actions, the corporate actions, and then the Ondo blockchain. And this is coming right after the LayerZero collapse, where now they're admitting they're at fault within the Kelp DAO hack. And so now we're seeing a flurry to Chainlink. And so by all metrics, by all insight we see online, people, entities are flocking to Chainlink as a decentralized Oracle network, as a provider of on and off chain data. And so Matt, first kind of thoughts here, because we have two big, this big one by DTCC, I'm pretty sure you want to talk about.
Yeah, so like you mentioned, DTCC had done nearly, what was it, $5 quadrillion in volume just in last year alone, and obviously that number continues to climb as we see the price of securities increase and the number of things that they do settle increase. So I think that volume is only going to get bigger as time goes on. As you also mentioned, there's a lot of moving pieces when it comes to settlement, and we've really tightened up, over time, what that settlement window looks like. That was one of the main proposition values of DLT as a whole, is to minimize the amount of time that something needs finality. We're going to be allowing, with these types of integrations, more secure data delivery, which is very important, especially from institution to institution, making sure that important and sensitive information doesn't get leaked. Interoperability, auditability, which is one of those human pieces that is really can even create bigger issues versus just having really, really clean, automated software that handles all of that heavy workflow for you, and really employing more people to create or make modifications to the way that your point of sale or your customer facing application works with these particular applications. Also, having guaranteed uptime is super crucial to them. There's a lot of little instances where we have seen trading frozen for one reason or another, and that's happened on the Dow Jones and the stock market. for data feeds going down. It doesn't happen for super often, but when you are day trading or people who trade huge position sizes, having the market down for even, let's say, 60, 90 seconds is a very big deal, and it can lose people a lot of money and really change the way that people trade as a whole when they feel that panic about the markets being frozen like that. Not to say that you still can't have server outages, but this kind of creates those additional catch points where things don't necessarily fall so heavily. When we think about the overall tokenization story with stocks, like we mentioned Ondo as well, the integration with Chainlink and essentially ERC20 as a whole with Ondo, we're really just bringing the level of liquidity and custody and flexibility, capital management, also just being able to shore up collateral a lot more quickly and a lot more easily, being able to store that collateral on different chains while still providing the same amount of collateral to secure positions, whether we're talking about derivatives or long-term equity positions, whatever it is. This is really going to take the institutional experience and as well as the retail experience, but primarily institutional experience to a much higher level as far as cleanliness and capital flow. Remember too that you can have assets that represent collateral, if, like, for example, Ondo's OUSG, which represents essentially treasury bonds, and you can take those liquid assets and put them up as collateral on whatever chain you want to be doing business on, and kind of keep that money flowing so you still have that money and capital working for you without giving up the token in itself, and then securing other higher risk investments, like I said, whether it's derivatives or another type of contract that fluctuates and requires that shoring to be happening on a more frequent basis. So there's a lot of potential here when it comes to Chainlink and DTCC. I'm very excited to see what kind of volume actually occurs on Chainlink. I think one of the biggest things we're going to see is that punchy headline of 4.7 quadrillion volume coming to Chainlink. That doesn't necessarily mean it's all going to be settled on Chainlink. There's a lot of nuances, including the fact that when you're operating on some of the other chains that you're being interoperable with, you're not always going to pay in Link and you're not always going to pay in ETH. Sometimes you're going to pay in Litecoin on that chain, but it will bring volume to Chainlink long term, I believe.
So Chainlink is the primary oracle that is being adopted within crypto. 30 trillion in transaction value enabled. It has the market share. It is getting the adoption by institutions, by DeFi protocols, providing price feeds to Ethereum mainnet. And so Chainlink, by all hype you can gather online, is the premier decentralized oracle network. But does that mean you should buy Link token